you. So now let me turn it over to my colleague, Cy Richardson. He's Senior Vice President at the National Urban League. He is a member of the League's executive leadership team. He's also the co-chair of the Black Homeownership Collaborative. Prior to being appointed in 2013 to lead the League's programs department, he served as Vice President for Housing and Community Development, where he promoted asset building and wealth creation for people of color in urban America. In his current role, he leads the League's program design, implementation, and evaluation activities, supporting national efforts to create economic and social opportunities and ensure that prosperity is widely shared regardless of race, gender, ethnicity, or geography. As a grants officer, he supported efforts to increase economic security and mobility for low-income families, close the racial wealth gap, and advance financial inclusion. Before joining the Urban League in 2002, Cy worked in a range of positions in New York City municipal government, including as a researcher and policy analyst with the New York City Council, with the New York State Legislature, and on economic policy issues, and as a land use planner for the Brooklyn Borough President, right on the cutting edge of where our work is. So Cy, we are thrilled to have you with us and looking forward to this next discussion.
Great. Thanks so much, David, and good morning to everyone. This section focuses on the dimensions and dynamics of the prevailing homeownership gap for people of color and the opportunities available to us, as well as those still under formation, for first-time and first-generation homeownership. But just quickly, before you begin the conversation, and we'll move through this material quickly, let's first agree and revert to a key original position, and that is that racial inequality in America starts with the home. The gap between white and Black homeownership rates today is the largest it's been since 1890. Because homeownership is perhaps the critical way in which Americans build wealth and transfer it to their kids and grandkids, the racial homeownership gap is a central component of the racial wealth gap. And because homeownership determines where we live, the homeownership gap also contributes to social segregation, which undermines social equality because differences in policing and all kinds of services directly relate to where people live. This, colleagues, is just a glimpse into how the Urban League and other advocates perceive and frame the scope of the challenge. But what are some of the key steps towards reimagining the housing market in ways that address racial inequality? Indeed, what's the pathway and rate of pace to lay the concrete steps that the federal government might take to increase minority homeownership and decrease the racial wealth gap? Okay, so here to share their experience, perch, and insights into these central questions, as well as other lines of inquiry, we have four key players with us today. We have Cindy Waldron from Freddie Mac. We have Katrina Jones from Fannie Mae. We have Steve O'Connor from the Mortgage Bankers Association. And we have Lindsey Johnson, who leads the U.S. Mortgage Insurers. So I'll quickly read their bios for the benefit of all participants and then yield the floor to Cindy to launch us. So Cindy Waldron is Vice President of Research and Analytics in the Single Family Client and Community Engagement Division at Freddie Mac. Her responsibilities include driving business solutions for the single family business and its clients by leveraging research, data, and analytics to target and overcome barriers to homeownership. Through partnerships with lenders, nonprofit organizations, national intermediaries, and industry networks, she addresses the issue of homeownership preservation, affordability of housing, housing supply, and access to credit. A veteran of over 20 years in the mortgage industry, Ms. Waldron joined Freddie Mac in 1999 and has held leadership roles within the single-family model and analytics and affordable lending and access to credit divisions. Our next speaker will be Katrina Jones. She's Fannie Mae's Vice President, Business Solutions, and reports to the Senior Vice President of Strategy, Insights, and Business Enablement. Jones leads the single-family customer co-development, market readiness, and sales enablement functions. Previously, Ms. Jones has served in a number of other roles at Fannie Mae, including as Vice President of Single-Family Customer Management in Fannie Mae's Eastern Regional Office and Director of Single-Family Product Development. Prior to joining Fannie in 1996, Katrina held various leadership positions at Wells Fargo, where she was responsible for all aspects of regional operations and management. She also has more than 12 years of retail mortgage lending experience. Steve O'Connor is not only a really good guy, but he's also Senior Vice President of Affordable Housing Initiatives at the Mortgage Bankers Association. He manages the MBA's efforts to support the affordable housing policy and business objectives of their members. He is also responsible for outreach to industry groups, consumer organizations, and other key stakeholders. Steve leads the MBA's Consumer Affairs Advisory Council. He also serves on a number of industry boards, including the National Housing Conference, the National Association of Hispanic Real Estate Professionals, Freddie Mac's Affordable Housing Advisory Council, the National Urban League's Business Solutions Council, the Homeownership Council of America, and Rocket Mortgage's Consumer Advisory Council. Steve joined the MBA in 1996, and previously he worked in government affairs for the National Association of Realtors and Freddie Mac and Skyline Financial Services Corp. Finally, Lindsey Johnson currently serves as president of USMI. USMI is the nation's leading private mortgage insurance association, comprised of 5 of the 6 US mortgage insurance companies in the country. As president of USMI, Lindsey works with member companies to advance the value of private mortgage insurance to borrowers and taxpayers and to promote a sustainable housing finance system backed by private capital. Lindsey previously served as the director on PricewaterhouseCoopers' public policy team and as a member of the Senate banking staff as a Republican staff director for the Senate Banking Committee's National Security and International Trade and Finance Subcommittee. Also a senior policy advisor to Illinois Senator Mark Kirk. Lindsey was also director of the Federal Home Loan Bank of Atlanta for 7 years. He currently serves as the director on the board, and immediate past president of Women in Housing and Finance, and as a director on the board of Habitat for Humanity for Northern Virginia. Wow, that's big time respondents here. So anyway, let's start with the presentations, and I may have questions for you on the tail end of that. Maybe we can all come on at the end if we have a minute of time for a group conversation. Okay, let's go. Cindy, the floor is yours.
Thank you, Cy, and thank you to NHC and the Homeownership Alliance for hosting this event and for inviting me to take part. To reduce the homeownership gap and to look for opportunities, my team at Freddie Mac is researching the borrower of the future. To that end, we have researching the ecosystem of the borrower of the future for the last few years to help inform future homeownership, sustainability, understand racial gaps in the homeownership potential, identify solutions to bridge the gap, and use a targeted approach to identify new sourcing opportunities. If we can move the slide for the, thank you. New income or low income and minority borrowers are not homogeneous. I think Sandra Thompson had mentioned that too. You need to understand the barriers and opportunities by various aspects at the local level, using credit profile, geography, income levels, and housing supply. On the next slide, you'll see how I'm going to give you, we look at identifying different opportunities for homeownership, excuse me. I'm going to give a very high level examples of how we look at researching these different components of the future borrower. I'll focus on our methodology and outcomes versus explaining the calculations behind them for now. First, we look at our future borrowers for mortgage readiness, not by our underwriting standards, but by an academic category of credit score and credit attributes. We break down the population of all credit visibles in the United States by mortgage owner, which is in the blue, mortgage ready, which is green, near mortgage ready in orange, and not currently mortgage ready in red. One thing to note is that the mortgage ready has been going up over the last few years. This is a good trend and an opportunity for future borrowers. On the next slide, we look at these categories by race. Note that the trends are going in the right direction. For mortgage owner, which is in the top left, we see mortgage ownership going up, but not as steeply for Hispanic and Black borrowers. The mortgage ready has good signs where we see AAPI has a high percentage of mortgage ready, which is in the teal. Hispanic future borrowers are increasing in mortgage ready in red, and Black future borrowers have made some progress in the last few years. Next, we see that the near mortgage ready has a good signal for Black future borrowers, as there is an increase in this category and a decrease in the not currently mortgage ready, which may indicate that population may be moving towards near mortgage ready and then hopefully to mortgage ready. On the next slide, we then look at where the mortgage ready live and if someone who is mortgage ready is able to afford a house where they live. The heat map shows the percentage of mortgage ready that can afford a house where they live, and the bubbles show what percentage overall are mortgage ready. So you really want to see a dark blue for the heat map, and then either a green or a light green for the bubbles. As you can see in the Midwest, there's a lot of mortgage ready that can afford it. There's a lot of the blues and the light blues. And you also do see that there's a lot of mortgage ready in those areas. When you go to more of the East Coast, you see it's less affordable for the mortgage ready. There are a fair amount of mortgage ready individuals there. If you go to the West Coast, you see that it is not as affordable for the mortgage ready. But you do see that there is a lot of mortgage ready there. An example is that there are many AAPI who live in high cost areas. We did see that there was a lot of mortgage ready of them, but unfortunately, they live in areas that are not as affordable. Next slide, we also look at factors of down payment. Here you see a heat map showing how long it will take to save for a 3% down payment based on their income and where they live by race. How to read this map is that the green shows less than 1 year to save. Light green is 1 to 2 years. And then when you get towards the red, it's more than 5 years. Typically, high-cost areas need more time to save and can benefit from low down payment programs. We can also calculate various down payment programs to have lenders get a better sense of how long it will take after the assistance. These maps show a lot of opportunity for future borrowers to save for a down payment. And with down payment assistance, it would even be less. On the next slide, we look at where housing stock is adequate. And if the ratio is greater than 6, there's adequate housing stock, which is the dark brown. The more it moves to yellow, the more there is a lack of housing stock. With this much of the housing stock shortage overall, it will only increase demand and increase house prices. We saw around a 19% increase in house price appreciation this last year. This will reduce the affordability for many first-time homebuyers and the first-time generation homebuyers. On the next slide, we also created a tool to better understand future borrowers. This looks at mortgage ready and compares the recent first-time homebuyer income distribution at the local geographic level. This tool allows you to select a year or years, income levels such as middle income and low to moderate income, and lastly by race. The red is showing affordability at the low end, and the green is the highest affordability. Not too surprising, you see it's very affordable in the middle of the country. And then in the different coastal areas, you'll see it's more unaffordable. On the next slide, we show an example of how you can look at the MSA to better understand the future borrowers' opportunities and challenges within that geography. The tool lets you hover over a geography, as in this example, in Omaha, to show how many are mortgage ready in that MSA, its affordability, time to save for a down payment, and housing stock index. This allows you to drill down to various geographies to better help source borrowers of the future. On the next slide, these maps show views of the low to moderate income, which is in the top right, the middle income, which is in the lower right. You can see just in these income levels how the affordability decreases from the top right to the from the bottom right, excuse me, to the top right. This is far less green, more affordable, and more yellow, orange, and red. We have a map for Hispanic future borrowers as an example on the very lower left. You can also look at Black future borrowers as well as AAPI future borrowers. Through our research and tools, we are better able to help identify challenges and thus provide solutions that are tailored, intentional, and impactful. We then work with lenders, nonprofits, and others in the industry to share our research to be more intentional in sourcing loans, developing pilots and programs to more effectively and efficiently solve for barriers to sustainable homeownership for the LMI, communities of color, and first-time home buyers. Thank you, Sai.
Yeah, Cindy, before you bounce, just a couple of questions, because you have all of our attention, and even Erica mentioned in the chat how incredibly tactile the tool is and valuable. Just a question, where do you think your research could go next to help communities of color? I think that's kind of a fundamental question. And secondarily, just on your last kind of slide, how important is the middle income kind of narrative to close in the home ownership equity gap? Can you just speak about the middle income cohort?
Yeah, so let me first talk about the middle income. So we see in our research that unlike the white homeownership gap, which is not as much of a gap between the different incomes, we see a larger gap where it's the LMI and then the middle income, and then the high income doesn't have as much of a gap. Most of the programs are really based on the LMI. And so where we're putting a lot of our efforts at Freddie Mac to the LMI community and communities of color, we also want to focus and not forget, which I'm coining as the missing middle.
Right.
So if you think about the middle class, they have more disposable income. Our research shows that many of them are mortgage ready. So we need to better, more efficiently target this middle class where they live, looking at the housing stock, as Director Thompson said, focus on housing supply, where they live, to really move the needle to improve the homeownership gap for Black Americans and Hispanics.
And what's the call to action on the research angle? Just give us a minute on that.
So for the research, I just gave you an example of some of the research that we're using. As you can tell, it's very tailored, it's geographic, and we're using that. One of the things that we did was we went really deep down to the geography, like in Omaha. We saw that there wasn't a lot of housing stock, and we saw there wasn't a lot of people who were developing housing stock there. So we actually created a curriculum for Develop the Developer. And so we've had 2 cohorts go through, and we're having them do capstone classes or capstone for their class. And then we're actually taking it to the next step, not just training them, but having them work with, nonprofits, thinking about shared equity, vacant lots. So it's really about not just taking the research and, kind of opining on it, but using it for actionable research. We also look at the aging housing stock and how do we think about where that is to have, again, Director Thompson mentioned it's not just new housing, but existing housing or ones that we need to rehab. So we're also looking at what are the barriers. As she mentioned, we do have products and services for that. Why are people not utilizing it as much? And so looking at that, looking at where the aging housing stock is, and then putting together products or pilots where we're calling one community champion and really working on being a bridge between borrowers and lenders to better do rehab for houses.
Fabulous. Well, clearly Freddie Mac is not just committed, but compelled. Thanks very much, Cindy. I'll now pass the mic to Katrina Jones. Katrina?
Hi, can you hear me?
Yes.
Awesome. Thank you for having me today. And I need to update my bio. So I'm now I have a new role where I've taken on an opportunity to lead our racial equity strategy and impact for the enterprise. So I'll make sure I get that updated for all of you.
Well, you had me at hello with that title. That's great.
Hey, thank you for hosting this panel, and we really appreciate the NHC for convening a forum of industry stakeholders to share and share our experiences in what we're doing to advance racial equity in the housing industry. It's been a long embedded part of our mission to extend the benefits of a robust, stable secondary mortgage market to all borrowers and renters, and especially the low and moderate income people and communities of color for whom these benefits, quite honestly, have been denied for generations. And as our CEO, Hugh Frater, has said, reversing the legacy of discriminatory housing policies and practices, it's one of the greatest challenges facing all of us in this time. So a year ago, he affirmed that Fannie Mae was committed to doing all that we can to support a housing finance system that advanced racial justice. And that commitment has sparked new thinking, new efforts inside of Fannie Mae that we believe will lead to positive change. So let's go to the next slide. We know that, and I appreciated Director Thompson's comments because we echo that sustainable homeownership is important. And it has been a long main driver of generational wealth, especially in families and communities of color. But there are many obstacles facing consumers on their path to homeownership. So as Cindy talked about the market and the macro demographics of the environment, we sort of click down and we're focusing on the consumers themselves and their path to homeownership. What are those gaps and obstacles, starting from being a successful renter to appraisal bias that also includes things like closing costs and down payment assistance. The list of potential obstacles across that housing journey, it's long. What I'll share with you today is our approach for addressing racial equity and how we're looking at it from this version of housing journey and how that continues to evolve for us internally at Fannie Mae. And I would also offer that this evolution, it's rooted in the lived experiences of renters and homeowners, and it's backed by data that helps us understand those obstacles on a person's journey and securing housing. Our approach, the way we're thinking about it internally, is to reduce or eliminate those obstacles across a person's housing journey, one obstacle at a time. While we've made some progress, there's so much more that we can do. And what I will offer for folks on this call, and you'll hear me say it often, you heard Director Thompson say it, we cannot do it alone. And so grateful to have this forum to help provide us feedback to understand what else we could be doing and how we should be thinking. Let's go to the next slide. This is one that that has us really excited about the opportunity. As we think about what we can do to close the homeownership gap, we think about it from the vantage point of how do we expand the pie of prospective, viable home buyers. Our data from this year's National Housing Survey, if you haven't seen it yet, it's the second quarter, it reveals that the aspirations to own a home, it's almost universal, but it skews slightly higher among Black renters. Our research has also shown us that Black renters are interested in learning almost everything about the home buying process in comparison to other cohorts or other segments of the population, including down payment assistance, what it means to be pre-approved, because that's what I tell my family, don't go looking for a house until you're pre-approved. What are those documents that are required throughout the mortgage process? How do I think about down payment and my money management? How do I think about managing my credit score and improving it so I get the best terms? So we continue to ask ourselves these questions, but we also ask, should all of these folks have their faces pressed upon the window of opportunity? Or said another way, how can we help them? Can you go to the next slide, please? Well, we've talked about it a lot, and what I've appreciated is with the aspirations for homeownership skewing higher among Black renters, what's We see the vast homeownership gap between Blacks and white Americans that need to be addressed. But we say to ourselves, then what's the problem? What's causing this gap? And we know the reasons for the gap are complex. Some we can control, some that we can't control from a Fannie Mae perspective. But what we've started to do as we've engaged with lenders and other industry stakeholders, we're trying to understand what are some of the foundational things we can do today that we can build upon in the out years. And some of those feedback that we've gotten, some of the things that we should consider doing are things like spearheading greater diversity in our industry and workforce housing so that the folks who are engaging with communities and people of color are more representative. We're also looking at ways to expand affordable homeownership and rental opportunities for underserved populations that can lead to that long-term generational wealth. We're expanding access to mortgage credit responsibly and sustainably. You'll hear us use those words interchangeably. And that's done through more inclusive credit evaluations that addresses the growing needs of individuals who are excluded from today's process. Providing homebuyer education, I'll talk a little bit more about that. And that's important to help increase consumers' knowledge and to dispel the myths about the home buying process, while also educating people on how to be a successful renter and stabilizing homeownership. Helping homeowners get into homes is important, but helping them stay in their homes is equally as important. And so helping those homeowners and renters who have been impacted by the pandemic, working with our partners, working with lenders and servicers to provide solutions, increasing housing stability through our Here to Help education efforts has been critical as we shore up and narrow the homeownership gap. Let's go to the next slide. For many low-income renters, especially for Black families and other people of color, the leap from renting to owning a home and building wealth can just seem nearly impossible due to insufficient credit history. We know that that building credit in the United States, it's not an equal opportunity endeavor, and people of color are disproportionately represented among the 20% of the US population that's having little to no established credit history. We also know that despite this lack of credit history, data is also showing us that there are ways to demonstrate the ability for these individuals to demonstrate that they can afford a mortgage. Fannie Mae decided to tackle this issue head on, and we've been talking about it for a long time internally. And we decided through the lens of innovation, where we can leverage data and technology to remove systemic barriers to mortgage finance. And as you heard Director Thompson talk about, our recent groundbreaking update through our automated underwriting system, desktop underwriting, we're now giving lenders the ability to consider the history of reoccurring rent payments and assessing the eligibility, expanding access to credit in a safe and sound manner, and increasing opportunities for thousands of qualified renters to finally become first-time home buyers. This is an example of what we say, that's an obstacle that we are overcoming, trying to take a stance at and tackling one at a time. Down payment assistance and closing costs, wow, that's, you see, top of the list, has also been an obstacle identified in our research that may be preventing Black renters from becoming homeowners. And as research suggests, the down payment assistance could be the most effective way to start closing the racial homeownership gap, since it addresses a fundamental difference in available liquid assets. So as we work closely with our regulator, many of you, and lenders, we're looking forward to expanding on our Community Seconds program, which in the last few years has enabled us to acquire more than $20 billion of loans that include some sort of down payment assistance. Let's go to the next slide. This is where we talk about that homeowner's journey. If we agree that homeownership is a linchpin to wealth creation in the United States, to support that achievement, what we've heard from industry stakeholders and lenders and advocates, we may need to start much sooner, sometimes years before people feel the desire to own a home. And what I'm talking about is education. So educating people on establishing a credit history, being banked, knowing their rights and responsibilities as a renter, the kind of savings and wherewithal that they need to potentially, when they're ready, own a home. These are areas where we at Fannie Mae, we believe we can make an impact. We think there's room for more comprehensive, independent education efforts that are not explicitly linked to the mortgage process. Again, I go back to this is how you expand the pie and get people more confident to engage in becoming a prospective home buyer. It's why we've created resources that will assist consumers across the entire housing journey. So for example, Your Own Story, you may have heard us talk a little bit about that. It's a new portal, which is designed to guide potential home buyers through each phase of the home buying process, from helping them learn about their credit, improving their credit, understanding their debt, providing them guidance with working with lenders and real estate agents. And if you want more, it can be private labeled. You can distribute that through your own platforms and portals. Just visit knowyouroptions.com. And I think it's /homeownership to learn more. We're also prototyping in our rental space, for those of you who are interested, the Rent Smart app. That's available on the App Store. And it's an on-the-go, one-stop shop resource that helps renters navigate their rental housing challenges and engaging with landlords. You know, I say to myself, I wish I had something like this when I was a renter. It certainly is insightful and helpful and intuitive for the individual who's trying to create and build that path toward potential home ownership. I would offer that we are on a journey. We're making progress, but I can't stress the point. There's so much more that we all can do collectively. And as I said earlier, we can't do it alone. I know that working with our partners, working with FHFA and other industry stakeholders, we look forward to building out and executing on a multi-year plan that really will underscore what we're trying to collectively do across that housing journey. How do we tackle each of those obstacles one at a time to make a real impact? So I look forward to hearing your ideas. Hopefully you can appreciate the approach we're taking, trying to unpack how do you narrow the homeownership gap, because it's not one singular solution, it's multiple solutions across that consumer's housing journey. These are the obstacles in the years to come that we know that's going to take all of us to work on together. And as we work on them together, I believe that we can make our housing system better, we can make it stronger, and ultimately, I think we can make it fairer.
Wow. That's incredible, Katrina. Before you go, and there's some incredible action in the chat with folks just, expressing their interest and their curiosity. And I'm just a bundle of curiosity myself. So I just have a question, if I might. When you were talking about Your Own Story and kind of creating kind of linkages to consumers, many consumers never come in direct contact with Fannie or Freddie. But I mean, the GSEs do ultimately provide buyers with important benefits, as you say. But in your view, Katrina, is it important at all or okay potential buyers might remain mystified as to the role of the GSEs? Is marketing and outreach to communities of color on the docket at all? And if so, how might that go and what would that look like?
Oh, I love that question, Cy. This is what I tell people in my family, especially people at Fannie Mae. We have to work with trusted advisors of the communities of color that we're serving, right? You're right, these folks aren't going to come to a Fannie Mae website, but they will come to you. Mm-hmm. And what we're hoping is tools and the resources like Know Your Options, Rent Smarter, and Your Own Story. Those are tools that we're making free and available to you to use with the targeted populations that we all aim to serve. So I agree with that point. And this is why that network of trusted advisor, consumer advocates, this is where these folks are going. The more that we can provide you with the tools and resources to better support these populations, we're all better for it. That's a great point.
Fascinating. Just one last piece, if I might, just as I asked Cindy, what's the call to action on research from your perspective? Where do we need more data, and where does the kind of storytelling, kind of narrative building need to be kind of infused with more data and more nuanced understanding? What's your take on that?
My take on it is, just as we are trying to get smarter around the obstacles for that consumer's sort of housing journey, I'd ask all of you to start to build out your own view of those obstacles and those gaps, because the more that we can talk and be aligned on what part of the journey that we're solving for, the better off we'll be. And we'll come away with collective solutions that's going to benefit everyone. So my call to action, all of you, is, have you started to build out a housing journey that's informed by data, that's informed by research, that unpacks that consumer's obstacles across their way to becoming a homeowner, from being a renter, prospective home buyer, to a home ownership, long-term home ownership? That's what I ask all of you to start to build out on your own. And let's start to share and compare notes, because that's when we can get better and have a better job of solving the toughest solutions that are facing these consumers today.
Great. Thanks, Katrina. Fabulous.
Absolutely.
So now the table's set, and we've got Steve O'Connor from the Mortgage Bankers Association to hitting third. So what do you got, Steve?
Great. Cy, thank you very much. Thanks for the opportunity to share some information. So Henry, can we go to the next slide? So let me just cut right to the thrust of what I want to talk about. There's a report that will be released tomorrow. It's based on research done by Cultural Outreach Solutions. It was sponsored by MBA and National MI, and we'll be providing an advanced copy to all the attendees for this event at the end of the session. So you'll be able to get a preview before it goes out publicly tomorrow. But this survey really was a look at the views and perspectives of the next gen, which is millennials and Gen Z home buyers, including recent home buyers in the last 3 years and aspiring home buyers, as to how they navigate the process, their attitudes, their preferences, in order to give us some insights how we can better serve them. And this directly relates to minority home ownership because, as I'm sure most folks are aware, this is the most racially, culturally diverse demographic cohort in US history. And so we can better reach and serve these consumers, we can really start to move the needle on the racial home ownership gap. So next slide, please. So just to cover, the particulars around the survey, we had 1,000 survey respondents that Cultural Outreach Solutions connected with. Again, it's Gen Z and the millennials, ages 22 to 37. And this population cohort accounts right now for 1 in 3 home purchases today. And of course, that number is only going to be growing. And of course, that is disproportionately a larger share of the first-time home buyer cohort. And then diverse sampling around demographics. And again, as I mentioned earlier, purchased in the last 3 years or trying to purchase. And it was survey data collected from May of 2021 through July. It focused on 3 questions, really, about the home buying experience, particularly for those who have been through it recently, and the beliefs and misperceptions. And Katrina just touched on some of those myths, and those myths continue to prevail. And then, of course, how has the COVID-19 pandemic impacted their views? And of course, last, and I think most importantly, in terms of relevance for action, is around communication, the best ways to communicate, the best platforms, particularly around social media. So next slide, please. So I talk about some key findings, but one thing I want to talk about in particular, I put the findings in 2 camps. One are the categories of findings that really just reinforce things we've been dealing with for a number of years. Katrina touched on a number of those. And then some fresh insights, particularly around social media. This is a generation that spends a lot of time on social media. That's how they consume information. That's how they make decisions. And I think that can inform our outreach and marketing strategies. And then I would also note, we're in a time of tremendous change and uncertainty, and this generation is not immune from that. So the dynamic environment and these findings may shift over the coming year or two as we emerge from the pandemic. Next slide, please. So just really reinforces the notion that people out there believe that you need 20% down or more. This is a persistent myth and barrier that we have to address. And you'll note, based on racial composition, it's particularly pronounced among Blacks next gen consumers. So we've got to find a way to combat this. I would say the one thing that you'll see this in the report that I want to mention, it's not on the slide, that most of the respondents for this survey had a bachelor's degree made between 50 and 75,000, and the higher you went in income and education, the less this myth persists. So clearly, there's an opportunity for education here, and we have to be, I think, also strategically focused on how we outreach around this particular myth. Next slide, please. So this just underscores, particularly, with a lot of Gen Z engaged in the gig economy, this myth that you need steady employment and a W-2. And of course, that's not true, but we looked at the Hispanic community, I singled this out in particular because this was where this perception was highest. It was also true with other groups. Blacks were second at 40%, whites at 35%, Asians at 26%. But this misperception that you need steady employment and you need through a W-2 employer versus the gig economy, different jobs that would add up to the income necessary to qualify for a home. So this is, again, one of the issues we're going to have to address. Next slide, please. And of course, this is not altogether surprising either. This notion that student debt or car loans will prevent people from qualifying for a mortgage. And of course, that's not necessarily true. It comes back to DTI and other factors. But again, a persistent myth and headwind that we have to combat. And I would add, this is not in the slide, but this myth, again, is more pronounced among next gen with lower incomes and lower credit scores. Again, I think underscoring the opportunity to educate certain segments of the next gen aspiring homebuyer population that this myth isn't true, and there are ways to get around this. Next slide, please. So one of the things we found that was interesting, or cultural outreach found that was particularly interesting, is next gen buyers do a lot of research and talk to a lot of people in their social network, their friends, their family, and others, before they ever contact a housing professional. And this is a group that's going to do their homework before they reach out to the real estate agent or the loan officer. So you need to know that they're going to be coming with information. Some of it may be misinformation, but know that they are doing this research before they even make that first point of contact. Next slide, please. Social media is a large source of information. And what was particularly interesting, I think, personally, was the different preferred social media platforms among some of the different next gen consumers, with YouTube being heavily featured, particularly among white and Asian and other, but the use of the Facebook platform for the Black community, and then of course the Hispanic community also looking at YouTube quite frequently. So this just underscores, if you're trying to reach these consumers, you've got to adopt the use of these different social media platforms to do that. I would say on communication too, what was interesting was when we asked particularly recent home buyers what they felt would be the biggest improvement in the home buying process. I mean, first of all, 70% felt satisfied generally with the process, but the number one issue they cited was they felt communication could be better. And in particular, they felt communication was weak among the members of the value chain, that the loan officer and the real estate agent and the builder and others were not effectively communicating with each other. And this created a perception of unnecessary complexity and confusion in the process. Next slide, please. Really heavy reliance on video content by next gen home buyers. And this is how they like to consume information. Long before they get to reading anything you might send them, they go to videos to get their orientation around the home buying process, the home financing process. And so video, in addition to the platforms, the content through video, I think, is going to be very important in trying to reach these particular consumers. I will just add a couple of things that are in the report and not on the slides. The preferred form of communication when actually conducting financial transactions, when they ultimately interact with a loan officer or a real estate professional, it's email. 75% said email was their predominant choice, followed by a distant second of face-to-face, and then phone calls, and then farther down are text and video calls. So if they really want be able to see it in writing, and they want to be able to take their time to think about it and then respond at what is convenient for them when it comes to actually using business communication, and email being the preferred choice. Next slide, please. This one is actually interesting and how important, and I'll talk about real estate agents as well in a minute, but when next gen consumers are looking for a loan officer, they do a lot of homework, and they rely heavily on personal referrals from friends, family, colleagues, etc., and ratings and things they find on the internet. And so it's a significant factor when you look at it at 54%. They're considered very important or extremely important in terms of getting reviews and recommendations. And they also rely very heavily on real estate agents for selecting a loan officer. It's interesting that when selecting real estate agents, friends and family become particularly important. Next slide, please. So I'm just going to juxtapose this slide and the next one in a second, but in 2020, they were asked about what sort of impact COVID-19 was having on their plans to purchase a home. 31%, so it was negative. Next slide, please. And you'll see that that number has jumped substantially when they asked the same question. Culture Outreach did a similar survey on 2020. So the numbers have gone up markedly in 1 year, and that speaks to a number of things. Katrina talked about the desires of Blacks and others to own homes, and this is true across the entire next generation. There's a strong preference for home ownership. But what's interesting is there's also, when you see the report, a concern on whether it's a good investment. Mm-hmm. So they want to buy a home, but they're concerned, I think, about buying the wrong home or overpaying or in the wrong location and being saddled with something. And this is probably, a financial burden. And this is probably an overhanging part from the Great Recession and what they saw their parents and neighbors and others go through at that time. Go to the next slide, and just to kind of close this out. Well, we can go back to the next slide. I'm sorry. When asked a couple of questions, 1 in 4 said the biggest challenge in becoming a home buyer was a lack of understanding of the process. A full 25% said just the challenges of understanding how to navigate both the home buying and the home purchase process. And then the importance, again, of online resources and personal networks, and a strong preference on video content. And ultimately, what I'd say when you look at the full report, which again we'll share at the end of this event, is to begin doing exactly what Cindy Waldron encouraged us to do when she did her presentation. Is how do you take the insights from a report like this, 29 pages, lots of survey, broken down by racial groups, income groups, etc. How do you translate those insights into action? And I think that there's a lot of fertile information. The question will be, what can we do with it to better serve these borrowers? And then, of course, increase minority home ownership. So, Sai, back to you. Thanks.
Hey, Steve, just while I have you, good stuff. In this kind of DIY era we're in now, are you guys concerned about the digital divide at all? Yeah. I know kind of the Blacks are over-indexing on cell phone usage, but there's nuances there. Can you just speak about how you guys are understanding how to reach folks?
Yeah, that's a great question. I will tell you, so we've got a place-based effort focused on minority homeownership in Memphis, Tennessee, that we launched in March of 2020. And of course, the pandemic basically shut down the country after that. And so we've done a couple of homebuyer fairs down there, but they've been virtual. And that's been a particular challenge in that community, right? How do you ensure that people have access to broadband so that they can actually participate in a virtual homebuyer fair? And I think that sort of thing is going to continue to be a challenge as we move into this more hybrid world. I don't know what the answer is, but I can tell you it's definitely a challenge.
Mm-hmm. Just one last thing. You talked about how folks receive information. I guess social capital can be used for good and not so good. How can we at the Urban League and others work with, this ecosystem to ensure folks are getting the right information at the right time? How can you leverage other systems to ensure that kind of responsible transfer of information?
Yeah, that's a great question. I'd say 2 things. One thing you'll see if you look at the report is people do talk about financial issues in their family and with their friends, but they tend to do it in a very immediate sense, right before they're going to buy a car or buy a house. there's a lack of holistic financial education. So anything that trusted advisors, to use the great term that Katrina used, can do to kind of increase education earlier in the process before somebody embarks on trying to figure out whether they're ready to be a homeowner. But then the other issue is, how do we develop the right messages and the right messengers through these social media platforms? So whether it's YouTube or Facebook, that's great that we know that these consumers are using those platforms, but what messages will resonate and who are the right messengers to get through? And I think groups like the Urban League can help there.
Great, good stuff. Thank you, Steve.
Thank you.
Finally, kind of closing us out, batting cleanup, Lindsey, please come on, give us your views.
Absolutely, Cy, and thanks for having me. I'm excited to be part of the conversation, and I'm going to jump just right in, and what great information and data to follow. So we can jump right into the next slide, Henry. Similar to what Steve just presented, I want to share a survey that USMI had commissioned by nationally recognized pollster ClearPath Strategies. It was done between the dates of April 13th through April 21st, 2021. And many of the questions, and you'll see the questions at the bottom, there's also going to be a link at the end of this, so you can go and look at all the different survey questions and the responses and findings. But a lot of them were asking about over the last year. So definitely capturing the COVID experience for many of these individuals. It was given to 1,000 participants, definitely considered a statistically sound and nationally representative sample in terms of getting that cross-section of, age, gender, race, religion, education levels. And ClearPath Strategies intently oversampled minorities in the survey so that we could really be able to have a more fulsome picture of their views of homeownership and the process and barriers, if any. So let me first just say what the survey is and then why we did it. The survey is not to present data and trends in the marketplace, even though a lot of it's going to comport to that data that we all collect and that Cindy and Katrina have presented earlier. This is really a survey based on the individual's thoughts and their beliefs and their opinions on questions that were asked about their experience or their views. It's also important to know that the survey was given to renters and to those who own their home. And our intent, again, was to understand their views of the process and then to better understand the challenges as they perceive them and to complement the hard data that USMI, that NHC, Urban Institute, National Urban League, many others are producing out there. Next slide, please. So a couple of the key findings from the survey, and again, these are people's beliefs as they reported them. Nearly 70% of the respondents cited limited affordable housing or just low supply of housing generally as ranking among the top home buying challenge in the US. Housing security during the pandemic was a significant concern, about 66% of all respondents, but particularly for minorities. The survey cited that the number one concern for African American and Hispanic respondents was falling behind on their rent or their mortgage payment. 74% of African Americans and 66% of Hispanics reported that in addition to the lack of affordable housing and lack of supply in the market, the inability to save for a 20% down payment and imperfect credit history were the biggest challenges for them buying a home. And then as we continue to drill deeper through these questions, socioeconomic disparities, lower income, lack of intergenerational wealth, limited savings, the percentage of monthly income dedicated to their housing costs, all were making housing challenges much more acute. And these factors we saw, and you can see in the responses back, are leading to lower credit scores, higher overall debt loads to manage, which then obviously contribute to an even more difficult time achieving homeownership. And the survey definitely demonstrates that African Americans and Hispanics rank these issues as more significant than their white counterparts. Next slide. And actually, we can advance it to the next slide. So we'll just drill right into the landscape. Several folks have commented on it here, but you can't reiterate it enough because I do think that there are occasionally questions, and Steve mentioned the question about, is it a good investment? This survey really demonstrates owning a home matters. Over 71% of respondents see owning a home as important to their stability and their financial security. 67% of Black and Hispanic respondents cited homeownership as either very or extremely important. Next slide. I think one of the biggest things about buying a home, and Steve was hitting on it and it's been mentioned earlier, it's the biggest asset that, you know, many, if not most people will purchase. It's one of their biggest purchases of their lifetime. And so it is a complex process. Word of mouth and seeking advice from friends and family members and watching their experience is so important about perceptions, beliefs, and actions. And one very interesting but also very alarming thing that came out of this survey was that when asked about the levels of homeownership among different races, you can see that the perception that minorities actually have a lower rate of homeownership than what it is in the US persists. So we all know the Black homeownership rate in the US is at a 50-year low. Katrina and others pointed that there's a 30 percentage point gap in Black homeownership among whites. But the survey, when you ask an African-American respondents, 62% of African-American respondents believe that only 0 to 25% of African-Americans own their home, when the homeownership rate as of the first quarter of 2021 for African-Americans stood at about 45%. Similarly, 61% of Hispanic respondents believe that 0 to 25% of Hispanics own their home, when the Hispanic homeownership rate for the first quarter of 2021 stood at 49%. So contrast that to the fact that 68% of all respondents believe that 25 to 75% of whites own their home, which more accurately captures the fact that about 74% of the white homeownership rate as of the first quarter of 2021. We really have to start to kind of pause and say, okay, what do those perceptions about such a low level of homeownership among these different populations? If you don't, if we know the rates are already low, but if you believe that people who look like you and your neighbors have an even lower rate of homeownership, what is that doing to perceptions, beliefs, and actions?
Yeah.
Next slide, please. Obviously, again, this survey was done over the in 2021, but kind of looking back over the last year, the COVID pandemic presented significant housing problems and worries, particularly true among minority respondents. As I mentioned before, the number one concern for African American and Hispanic respondents was falling behind on their rent or mortgage payments. That was twice the number for African American respondents as white respondents, and about 1.5 times the number of Hispanics responded that way compared to white respondents. I would note, and it sort of is gleaned from this chart, but definitely through other questions in the survey, despite the COVID-19 pandemic, and obviously we saw a lot of very positive homeownership numbers through 2020, but Hispanic Americans were the only demographic group to increase our homeownership rate. And actually, according to NAREP, they've increased their homeownership rate for 6 consecutive years, including through 2020. So something that we all need to be really aware of as we move forward and the constraints on housing. Next slide, please. So again, the survey comports with a lot of what we know, and and the problems that are facing the country in terms of racial disparities that do exist. And many of these are driven by the socioeconomic issues. So we really have to look at both the near term and the longer term solutions. I loved reading in the chat earlier all about the financial literacy that has to occur. We know some of that's happening, but you have to get into, very early on, having those conversations about what it means to be mortgage ready. Next slide, please. So again, housing and affordability and insecurity were the biggest issues that were cited. 70% of all respondents saying that lack of affordable housing was their biggest concern. 66% of Hispanic respondents cited that they don't live near affordable housing. And obviously, this is borne out across the market by rising home prices and rents. But as we continue to think about the changing face and the changing demographic of future homeowners, Urban Institute cites that Hispanics are going to account for about 70% of new homeowner households between 2020 and 2040. So about 5 million new homeowners. We all really have to be acutely aware of this need to continue to focus on the supply side of the equation. But other top home buying challenges, as we mentioned before, inability to afford the 20% down payment and imperfect credit, which ranked actually number 1 among African Americans. Next slide, please. More than half of African Americans and Hispanic reported that they spend 30% or more of their monthly income on housing. Almost 60% of African Americans and about 57% of Hispanics were reporting this, which really classifies this household as cost burden. And it's going to bleed into other things that we'll talk about here in just a moment. Next slide, please. Which include, of course, 52% of respondents citing lower levels of income as the #1 barrier to actually having access to homeownership. Systemic inequality was right up there for African Americans at 52%. Credit scoring, almost 50% of African Americans and almost 40% of Hispanics cited credit scoring as a significant challenge. And then lack of intergenerational wealth. So you just see these things over and over. Next slide, please.
Wow.
And then part of the exercise, of course, was not just to understand the perceptions and the challenges as they experience them, but to understand their understanding of the mortgage process and what we refer to as mortgage ready. Next slide, please. So we talk about the lack of supply. It's almost this esoteric policy issue here in DC, but no matter where you go in the country, it is the top issue on people's minds. And while the lack of affordable housing, drives discontent in the system, when asked, homeowners believed that they were generally treated fair during the mortgage process. And Steve mentioned this before. This survey shows that 87% of the survey respondents believe they were treated fairly. 90% of Hispanic borrowers, 87% of Black borrowers reported this. So it really was kind of that lack of affordable housing is a chief problem, not necessarily the mortgage process. Next slide, please. Again, we've asked questions, and sometimes the same questions, just in a different way to really try and drill down to the level of understanding. There's definitely still the knowledge gap surrounding what is required for a down payment. There is definitely a plurality of respondents who said that they don't know what the requirements are around down payments. And among the respondents, many believe that 20% or more was needed to qualify for a mortgage. About 30% of whites reported this, about 42% of African Americans, and 45% of Hispanics. Next slide, please. And credit scores continue to be viewed as having a very significant impact on mortgage costs. 60% of all respondents ranked credit score as the #1 issue that impacts costs, followed by down payments. Moving pretty quickly just so we can get through these. Next slide, please. And this slide really is just to emphasize the point that minority borrowers actually self-report lower credit scores. So 60% of whites reported either very good or excellent credit scores. Only 35% of African Americans reported very good or excellent credit scores, and 50% of Hispanics reporting very good or excellent credit scores. Next slide, please. I'm going to just continue to move. Actually, next slide. And then really to have a better understanding of, do you view the process, because credit score continued to come up sort of as a theme cited as a barrier and an obstacle. We really wanted to understand consumers' views of the credit scoring process, and then also their understanding of the factors that impact their credit score. And so there are a number of questions, and you can see a lot of data that consumers actually are fairly versed in what is going to impact their credit score. And they do view it as mostly fair, but obviously, we can go to the next slide, it all comes back to some of these socioeconomic issues that really just create this very unlevel playing field and make it much more difficult to have a positive credit score or an excellent credit score if you've got that much lower of an income. And so we asked we talk about the challenges. I know this panel, obviously, we're talking about some of the suggestions and recommendations. We heard some of those from Director Thompson earlier, but we asked the people in this survey the same question. And of course, you can advance 2 slides. I think a couple slides. There you go. Sorry, one more. Cutting hidden costs on mortgages receives very broad support. We asked individuals about closing costs, about down payment costs, about LPAs, and you can see that there's a lot of support for really reviewing these LPAs, reviewing, down payment requirements and understanding those better, eliminating hidden costs were, themes kind of consistently that were revealed. Next slide, please. And so just to maybe recap, and we'll go into yeah, this is actually the right slide. Obviously, an important aspect of getting into a home and breaking down the barrier on down payments is understanding your different mortgage options. So there were questions about mortgage insurance, whether it was FHA, VA, USDA, or private mortgage insurance, and the role of helping really provide access to mortgage finance credit. And 73% of respondents think that mortgage insurance is either very or somewhat needed. Next slide, please. And so I might just end with a couple of points about individuals' perceptions around loosening credit or increasing risk in the system. Again, this is something that we talk about, especially as mortgage insurers, on a very on an everyday basis. And borrowers don't often think in those terms. But what was very clear, next slide, please, is that through this survey, yes, while people want to see more affordability, they are skeptical of not having borrower equity as part of the equation. And I think a lot of the questions and responses that were received, you could still sort of read through the lessons of the financial crisis that linger and that continue to be recognized. And there is a concern among these different respondents about increasing too much leverage, about having too much risk in the system. So the majority of survey respondents valued equity, having at least some level of skin in the game. About 70% actually believe it's risky to obtain a mortgage with no down payment. About 72% believe that if you want to buy a home, you need to put at least some money down into equity into that home. And so, we, as part of the Coalition on Black Homeownership, as partnered with Fannie and Freddie and with so many of the other lenders, are really working through how do you have that delicate balance of increasing the access, increasing the affordability, but also maintaining that risk management.
Wow. Well, you rocked it, Lindsey. I mean, a lot of incredible data in there. Could you just hang back for a minute? I'd like to ask Cindy and Steve and Katrina to come back on. We have just 3 minutes. But I mean, there's just a wealth of kind of information in the chat and the Q&A I want to just get to real quick. First, if I could, can someone, just operationalize for everyone how we're using the term mortgage ready here? I think that has been a kind of line of inquiry in the chat. So if someone could just handle that, because I know the housing counseling industry uses its own discrete definition.
I would love to address that. So I love the data that Lindsey and Steve had. One thing that I want to tell you about is I'm really proud to say is that it's our 20th anniversary for Credit Smart. And so we revamped Credit Smart financial capabilities, and it's now a state-of-the-art financial capability curriculum that supports wealth building opportunities for all people. Thank you for everybody who participated in giving us feedback for it. This tool is free, user-friendly, ADA accessible, and really empowering. It really addresses a lot of the things that we've been talking about today. It talks about money management, credit and debt, consumer protection, housing, planning and resilience. We're using this data to better target who is actually the near ready, right? So the near ready, we're hoping to use this Credit Smart and a lot of the tools. We're working on a youth campaign. I know that was talked about to work on future borrowers. We work with housing counseling agencies as well as our own borrow help centers to target communities of color in all income levels. We are doing so in non-traditional ways that are seen as trusted to address this awareness gap that Steve and Lindsey mentioned. We just think the financial education, that's why we revamped Credit Smart. So please look at it. It's at freddiemac.com. And I think this will help this awareness campaign that we all are, that was highlighted today.
That's great. So I think I might risk taking a bite of the elephant in the room, given kind of what's in the news these days, and I'll focus a question that was in the chat brought up by Romy, but Araceli has also seconded this, and I'll read it from the chat. I'd like all of us to kind of share our views on this. The question is, statement first: once people of color become homeowners and are stable in their home ownership, increasing research is acknowledging that their homes appreciate less when they are located in primarily Black neighborhoods. Also, that equity from home sales is lowered due to discrimination in appraisal processes. How to address these deep issues? Even though we have a few minutes left, I would just like anyone's perspective on the appraisal conundrum as we kind of learn more around the boosts and blocks in this space. Anyone want to share their views?
Go ahead.
I'll just say, I mean,
Oh,
go
Steve is
ahead,
on mute.
Katrina.
No, I'm on mute, Steve's on, go ahead, please.
I was just going to say, something that we've said before, and I know MBA, has a task force, and there's a lot of really important work going on around this subject, but there's just no room for bias in appraisals. I mean, that's the exact reason you have an appraisal, and it can be done through a machine. It can happen through a person. So I know that there's a lot of focus on bringing more, diverse appraisers into this workspace. That's a really
Does that make sense to you, Lindsey? Is that to democratize the space? Is that a response that's legitimate?
I don't know if I'm gonna go ahead, Katrina.
Well, I also think, to add to Lindsey's point, it's back to transparency, right? The more you can, we do a lot with our collateral underwriter tool to talk about overvaluation. And one of the things I said, well, why don't we talk about undervaluation? Let the data be the mechanism with which you drive out and make public, who and where and to what degree undervaluation exists. That's how you start bringing transparency, and that's how you hold people accountable. Let the data do what it needs to do.
Great. Anyone else on that? I mean, I think I'm sorry, go on.
Oh, I was going to say, Freddie Mac just released a paper, I believe it was last week, really looking at the racial and ethnic valuation gaps in home purchase appraisals. So that's also on our website. And so we definitely care about this gap that you're talking about and trying to do more research on it.
Thank you. I appreciate that. This is a grown-up aspect of this conversation, and so we have to attack it head on. I appreciate that. Thanks to everyone, Katrina, Steve, Lindsey, and Cindy.